Hello, everyone, and welcome back to another episode of the Athletes Advisor podcast, where today we are interviewing business exit planners Robert Kale and Loren Vandegrift.
Hey.
How are you guys doing today?
Doing good, man. Yeah.
All good. Got 2 coffees in us, ready to go.
Yeah, ready to go. Let's do this
I got
thing.
the Celsius in me. We're feeling
Excellent.
good.
Yeah.
Amazing. Well, I brought you two on the pod because I really want to talk about the whole process of selling a business, valuing a business, just really understanding what it's like. 1, for business owners, but 2, for a lot of athletes who now are investing in private business and investing in businesses.
Yeah, we're seeing, in the past 5 years, I've seen, it was like, I remember 5 years ago, I first had a meeting with an athlete, of someone I'd never heard of, to Google it, whatever. And now it's like constantly, and I'm not even a sports guy. And I'm like, I know that name. It's like, definitely the trend is happening to have athletes kind of get more into the SMB space for sure. It's, yeah.
Absolutely. But the thing is selling a business and running a business is very different than playing football, per se.
Yeah.
And there are a lot of intricacies, which I'm hoping you two are going to be able to add some value, shed some light on things and really explain this in a way that, athletes and business owners alike can really grasp today.
Yeah, and also there's a lot of thing around it's all about a team and the discipline, and there is a lot of stuff that kind of goes from kind of sports and success in that arena, like being the top of your game and running and managing a business. In the same way, we also see a ton of success with military vets, people that have managed big groups. I mean, they're that kind of thing. Anything where you really need to have discipline and management and work together, it translates exceedingly well into
people
business.
talk about grit, and I think athletes and for military veteran folks have a lot of grit to get a deal closed, run a business with a lot of people. I mean, tough job.
You couldn't have nailed it better. They have grit and they have discipline. And that's why, for me, I'm so passionate about trying to help athletes with financial planning, because hearing all the horror stories that happen and how, I think the number is 84% of NFL players end up bankrupt 3 or 4 years after exiting the league. Hearing that is so concerning to me, because what is financial planning? It's discipline. It's putting money away. It's making the right decision. It's staying on track. And that's what they've done their entire life. So what I'm trying to do is take that concept, take everything they've been already doing and just implement it to the financial planning side of things.
Yeah.
So today I want to learn a little bit more about, you two, what you do to help business owners, and really what that process looks like for a business owner.
Sure. Yeah. I mean, we help prep business owners for a sale. Our job as a business broker is selling the business. So for a lot of people, they have a new venture to move on to. They want to retire, spend more time with family. And our job for 8 years now has been helping people sell their business. So we've sold deals. Most of them fall within the 1 to 20 million range, but we've done deals 60 million, 100 million, 130 million.
I think is our record now. Yeah.
Wow.
Last year. Yeah.
That's amazing. What was that business, if you don't mind me asking?
Well, can I say it's in the staffing space around in Detroit, around automotive stuff. I'll say that to be a little loose with it, but it's a very cool business though. They imagine having to open up, let's say, a warehouse or some new facility in some new city, and you need 2,000 people in 24, 48 hours. How is that possible? These people, they have the connections. They can do that. They can just get a 2,000 people staffed in 2 days. I mean, crazy stuff.
That's insane. Nationwide?
Pretty much, yeah. I mean, they were all over for sure. Yeah, I mean, I think that they couldn't do it probably everywhere, but it is like a superpower. Yeah, that was a cool business.
Wow.
So, yeah.
And how do you guys get introduced to these businesses or these business owners?
For us, our methodology, we don't do outbound stuff. So for us, it's a lot of our power is that people come to us, so there's ads and things, and then a ton of referrals, and just we're just getting also a reputation over time now, because what happens is if you do a good job for somebody, because it's like going through war together, right? Because you sell a business for somebody, it's, hopefully it's a 6-month process, but usually it's more like a 9-month or a year process, because, it takes a minute. And so once you've kind of done that, people just go and they become your biggest advocates. So I'm sure, Sam, in your world, right? You succeed with people on the financial advisory side, they're going to tell everybody because you have a successful story. And so for us, that's a lot of referrals, and then some ads, and then but all inbound. Which is nice for me, because I'm not a cold caller. I'm not going to go call, but you want to sell your HVAC business? It's that's not for us, at least.
Yeah, they need a reason to sell too. I mean, if you're making great money and you got time, energy, you're young, you want to run a business, why would you sell? So when they start thinking about selling,
that's the other thing.
Google, our name comes up. We have a good reputation for the past 12 years. they reach out to us, and then we kind of sift the businesses for the ones that are in a place to sell, because a lot aren't. I would say 90% are not in a position to sell when they reach out.
And there's a right time too, for us, I hate getting the call from the 85-year-old guy who's like, well, I got a 3-year project coming up and I just got cancer and I don't think I'm going to make it through the project. I've had that call more than once, probably 5-6 times I can think about. And that's just devastating, because what's the point of working? A lot of these guys, if they love what they did, or it was their passion, or they went to work every day like a Warren Buffett type, that'd be one thing. I'm talking guys that it's just what they knew and what they were doing. And they didn't think, if they could have sold it when they were 50 and had all of that time left, why? And so to me, there is a really right time and a wrong time to sell your business, both in how the business is doing, how it's running operationally, but also just you as an owner, because there's so many ways to do it. There's no, selling a business isn't selling your house. It's a very different process. There's a lot of different ways to handle it. And there's timing is everything, I think, when it comes
might be more emotional too, selling your business versus selling a house or some other assets, your baby.
So I tell people, other than maybe your wedding and your kids, there's no bigger thing. That's why for us, it's a huge trust thing, because you have to trust, we are taking your baby literally, and it's going to be likely in some cases, unless you do it right, a big part of your net worth, your nest egg, everything that you're trying to build or you're giving to your kids, it's a huge decision. And so that trust is what this whole thing is about, right? Just same with what you do every day. You're trusting people, their money. It's the same thing.
Yeah. Not many people open their bank accounts or their investment accounts to people, or even their business balance sheets to people the way they do with you guys.
100%. Yeah. Knowing what people are worth, all that. It's a very vulnerable position to be in. So it's something you got to handle with great care, And
I think something about you guys that you do a really good job is you're not afraid to give education for free. You're not afraid to help people, show them the path, show them the way, even if they're not paying you guys up front. And I think that goes a long way when working with individuals.
Yeah, it takes a year, right? So I tell them, you can use me for advice, keep my cell phone number, text me, call me, because
advice is free,
you get
man.
free advice until we close a deal with you. Even if you're not ready to sell for 2 years, call me, ask questions.
I have a company now. I've been talking to them for 3 years, waiting for the moment, and they've referred me 3 or 4 different deals so far. It's like people wonder. They're like, why do you? It's well, because everything is relationships, right? At the end of the day, as AI and technology and everything gets better, it's everything, right? So why not pay it forward? The world, there's a lot of stuff going on in the world all the time, but the idea that helping people and being there for people is always going to be beneficial for everyone in the long run. I'm optimistic, but I think that's true.
Yeah, I couldn't agree more. Yeah. So you mentioned a 6 to 9 month process. What does that look like? If you could walk through a business owner coming to you guys, let's say they have their HVAC business or their car detailing business. It's worth, let's say, $5 million. What is, and I guess, how do they value it? Let's start from the beginning.
Sure.
Yeah, valuation. So they reach out to us. We talk with them on the phone. We want to understand the qualitative and quantitative aspects, right? So you mentioned balance sheets, profit and losses. We got to see how much cash flow the business is making, right? So usually the way buyers value businesses is a multiple of that free cash flow. Therefore, that's how we value it. What that means is, okay, you got a business that you take home $1 million in, let's call it profit per year, free cash flow. And that might be, $700,000 in net profit on the profit and loss. It might be a $200,000 salary to you as an owner and $100,000 in other discretionary expenses on the profit and loss. So you got meals and whatever else, right?
Kids on the balance sheet, kids that may not work all that hard in the business.
And we've seen some funny.
Oh my God!
Habits.
My record is I sold a business that I will not name that they made about 4.2 million adjusted EBITDA, and their P&L showed 260,000. It was unreal the amount of things that
we've seen alimony, we've seen secret Teslas, we've seen
secret Teslas, hundreds of those. But I had a guy who basically he was into a whole different sport, a whole different thing, and he had his whole racing crew and everything in the car, everything just completely through the business
as a business expense.
Anyway, and I qualified too. I mean, again, not for this is a bigger deal, so we can get into that. But once you make if you're at a high threshold of EBITDA, you can get away with a little more because it's more private lending. You're not dealing with traditional banks, right? So that there's
not financial advice. It's consulting.
Yes, of course. Yes, consult Jimmy, not us. Yeah, take what we say on that side.
But let's say they have those expenses on the profit and loss. You add that back to the profit. You find out the cash flow, and then you apply an industry multiple to that. So smaller businesses, let's say you have a small plumbing business, you're making $500,000 in take-home profit or cash flow every year. It's been consistent. Those might sell for 3.5 times earnings, depending. The bigger ones, let's say you have a big HVAC company that's growing like crazy. You've got a management team in place. That's a really hot industry. Those can go for 7 or 8 times, 10 times. Those can go for really high multiples. The middle, 4 or 5 times if you have good growth, good team in place, solid cash flow, clean accounting. That's like the bread and butter of our businesses is like.
Yeah, it's a different world. It's not, I think the news, everything you read in all the podcasts, you're talking to the founder that made an app that like makes it so that you can like, it shows you how you brush it, whatever it does, some stupid social media app and they sell it for $1 billion with just users and no revenue. Like that all that stuff is a different world entirely, right? Like 90% of M&A activity is really in this, like this space, right? This sort of like $2 million to $100 million range is where most of this stuff lands. And is a much more modest set of multiples generally. Exceptions abound always, right? But yeah, that's typically how things are valued. And again, where it is, growth, all of the things he's saying, and management, and the thing to really think about is if you are trying to sell, to look at, are you the key man? Like if you go away, what does the business look like, right? And always be thinking about that it's okay to not have the business need you all the time. And that's the thing. I think some people, they build a lot of their identity around the fact that
absolutely,
it's their job, it's their life, it's everything. It's like their family and then their job. And so how do you, to make yourself less relevant as an owner is sometimes really scary, but it's also really important. And it's especially if you're looking to sell, it means you're going to get a much better return.
Yeah, I think it's hard for business sellers to understand what it's like buying a business, but the easy way for them to think about it is just picture yourself as the buyer. What would you want to buy? If you de-risk your business, then you understand what the buyer's looking for. If you have a team around you that helps carry on the business, you don't have, 5 family members working in the business, you don't have one large client that makes up 80% of your revenue, it becomes pretty obvious when you put yourself on the other side of the table.
Flip it. Yeah, that's definitely.
So let's say like the business owner though, and maybe you guys give this advice to your clients as well, but like the business owner is the key man in his business, and they call you and they say, hey, how do I value my business? I'm making this much money. Let's say it's great, everything checks out, but they are the business at the end of the day. Maybe they're a tennis coach and people go to them because they're the coach, or maybe they're, like I said, the face of their business.
I actually talked to a tennis coach, yeah. It does happen, yeah. So it's still sellable. It can be a discount on the multiple. Like for buyers, like it's going to be a tough conversation, right? So, you can
either, there's that, you can make a plan, agreements. And the other thing too is that like not every business is you sell the full thing all the time instantly, right? So there's like, for instance, if you're a big key man and you are, let's just say you want to detach, you want to get some cash off the table, you want to go other places, you want to work a lot less, but you're still willing to, let's say, be the key man, or there is a part of your job that you do love, but it's all the other stuff that you hate.
Yeah.
You can sell, you can keep, usually you want to sell a majority, 51%, but you can keep up to 49% of that business, still get some cash out, and sort of figure out what your role is, no matter how big or how small going forward too. So that's another option if it's like really key man, like you are the total face of it.
Yeah.
Like that's another way to do it too, which is
we actually have that now with a client. So your client that hates the admin, payroll, people part of it, but they love the core thing of what they do. They want to sell a majority, keep doing what they love, right? I'm talking about the IT one for the government.
Right. Oh yeah. Yes, of course. Sorry. Yeah, 100%. So yeah, we have that's the government contracting deal, which it's been fun lately. But yeah, one where like it's just sort of for certain people, there's just the thing when they really reflect on why they want to get out, they have certain things that that's the problem. Like the main core of the business, the things that they like, a lot of that's still present, right? And so if you can get a decent amount of money and then be able to roll some of that equity and still get to do the part that you love, and you find a partner. That's the other thing, is that you get to pick who's buying you, right? Because we are privileged to only work with people that have good businesses, so it can be harder, but like you're in the catbird seat, right? So you can kind of pick and find that partner that you want to scale with and grow with, and that you can be comfortable knowing that you're kind of in good hands and that it's all going to work out together, if you are even that key man. Or if you're not, this applies not even to key man stuff in general. There's always, like to sell your business doesn't mean you have to sell the whole thing. I say more than half of my deals now at this point, maybe even 75%, because I deal with a lot of the larger deals at our firm. Like people do roll because there's A, it shows that you believe in your company. B, most deals have some sort of structure, right? So you maybe get 80% cash and then 20% in some sort of like seller note where you're paid out over time at a modest interest rate. Well, then why not just roll that equity then and like believe in who's buying you? Because again, you're not just selling, it's you get to pick oftentimes who you believe in to buy you and really grow this thing. And no matter your role, whether you're a board member and you do 4 meetings a year and do a conference, that's your whole role, or you stay on as the executive, right? That doesn't matter, because if you believe in what they're doing, that payday you can get it the first tranche, and then 5 years later you can sell a company and make that same amount of money all over again. Yeah, if they do.
We had that guy in San Diego who at least tripled or quadrupled his equity value.
Oh yeah, my God, that guy is a phenom. But yeah, he's incredible. A San Diego guy. He sold his business, maintained 40%, and they've, I think, quadrupled in 2 or 3 years.
Which is a testament to both of those parties, right? The buyer and the seller.
Yeah. And because then also the other thing is that, and this is maybe a little in the weeds for the athletes and stuff, but when you buy a business, you've already bought it, M&A, right? So you can go, and a lot of businesses grow by buying other businesses, right? Because that is a really good way to sort of broaden what you can do, make yourself more resilient as a business owner. But if you started your own business, it's really kind of anathema to you to like go and buy other ones, right? You just know how to run your business, versus if someone comes in and buys into your business, they know how to buy businesses, right? And so that's another way to really grow that set of the business, whatever it is. HVAC is the easiest example, right? But you buy little HVAC shops that the guy wants to retire, and you can get that whole area because you're in San Diego and you want to go a little inland or whatever. Like those things are pretty easy and can lead to a much better bottom line, and also like a lot of synergies that work really well. Not to use a totally overused word. Synergies,
everyone's favorite word.
Yeah.
But what about the business owner, the key man? Again, we'll go back to that because I see this a lot. But what if they're done? They want nothing to do with this business. They want out, and at the end of the day, maybe they want to shift industries. They want to go into something completely different. Like it produces money. They made their money. They're just over it at this point.
I think goes back to what we were talking about, early planning, because the best outcome for that is they make the hires to make the business stable without them. That'd be the best outcome. So plan a year or two in advance to hire the right people, talk to you and to us about setting business up for a sale. That's the best outcome. Right. If the entire business is on them and they don't want to roll equity, it's still sellable, but we got to talk about terms and what that looks like.
There's always price and there's always things, right?
Depends how big.
Like if you're if you're the literal face of it,
we have seen websites with the owners all over the website, and you're like, all right.
And maybe there's some sort of more structure where it's like, you get money or an earn out based on, which I don't hate earnouts, don't get me wrong, but they're like truly, if that is the problem, there are ways to make it so if the business is successful after you, that you get paid out on that, right? But I mean, like you said, I think the main thing is just to always know that if you are going to exit a business, think about, like you said, what it would be if the shoe was on the other foot, right? If you were going to buy a business and it was the person's literal face, right? Well, how would I restructure this to make this different, right? Like you make it the group. I mean, like, a lot of companies, there's a face, but then there's a lot of people under them that are doing the real work. And so how do you make that a thing, and that happens on the chain. I mean, look, Berkshire Hathaway, right? I mean, they're at an interesting crossroads right now, and there was the Apples, like even the biggest companies in the world, they similarly have to find these paths to sort of say what they are on their own. And that's true for Apple. It's true for, whatever, the nail salon that's got the lady on the front, or the insurance agency, like whatever.
The beauty as a buyer and a seller is you make it a win-win, right? So the buyer's like, look, if you get hit by a bus tomorrow, the business dies, right? And the seller would, in most cases, be reasonable and be like, okay, yeah, but that's not going to happen.
Right.
But like the point is to reach a structure that works for both parties. And that's what I think is fun about our job, is like creative structures and finding a deal that works for everybody and becomes a win-win-win-win-win across the board.
That's what's the best about this business. Yeah. Is it like, and there are exceptions, of course, if people are desperate or there's that kind of thing. But when you have a good business that's growing truly, everybody wins, right? Like the debt people win because they get their interest rates. The operators and the buyers win because they have a great business, and the sellers win because they get a great payout. And that it is one of the few things I think where it's a truly net positive across the board. Which is why I love this job, because I just like it. I can confidently go into something knowing that it's all going to work out well for everybody, and I've seen it countless times, which is what
Or we all lose together and we bonded over the loss. And
Exactly.
But like when you guys, because it is essential to find the right buyer for the right seller and the right seller for the right buyer. What do you look for? What are the qualities you look for in each of them?
Who will pay the most money? No, I'm just kidding. Well, no, that is, I'm literally, this moment, I'm selling a company and we have about 9 offers, really good ones. But truly, we're thinking through, it's not just who's paying the most. And I have to have that trust with my seller to be like, hey, we might not want to go with the best offer because we want this thing. It's easy to write in a piece of paper and say, hey, I'm going to give you this much money. And here's how. I mean, we do check things, but it's much harder to get that money in the bank, right? And so finding the right buyer that has the right blend of different kinds of capital, how they're going to raise it, if they have it already. There's all these different factors because that's a huge, huge part of it because a lot of deals break under what a letter of intent, under LOI it's called, where you kind of sign the agreement saying, hey, I'm buying this business for this much and here's a structure. And that sort of sets up this diligence period, right? Where everyone's checking all the financials, making sure you make the money you say you do, doing all the legal stuff, making sure you haven't been sued, all that kind of stuff. And in that period, things break a lot. And so selecting the right buyer, not just based on price, but based on who they are, what you think that they can get to close, and then obviously what they can do post-close. Because it's your baby, you want to make sure it's people you believe in, right? And not just some whatever, like private equity is a dirty word, but there's so many really good private equity guys. And then there's a ton of real bad ones too, right? And so making sure that you're finding and selecting the right people. The same is true in financial management. Right?
We were discussing we may go with an offer that's less money on paper because we have a higher confidence to closing with them. We might recommend that one to the client because we just feel better about them and the deal structure and the money they can get. Did you watch Succession at all?
Some episodes didn't get too deep into it. I've been told by way too many people that I need to watch it.
It's a fun show, but there's a line in it where the father's negotiating against the kids and the father goes, "Congratulations, you said the biggest number." And it's kind of like, that's on offers, that's what he's saying. You can put the biggest number on paper, but confidence to closing is different.
It's like for instance, I have a lot of sellers that they want me to do a bidding war, right? And I'm like, well, it's not a house, because a house is sort of this like I guess there's valuations and stuff, but in a business, there's, especially with debt and smaller deals, you can only pay so much debt service on income. There is a ratio, there kind of is an upper limit. So people will say big numbers, and then they're just going to, in the quality of earnings and the diligence, they're just going to have to adjust because they physically can't buy it, right? And so that's another thing, is that there's just sort of blindly making people up their bid doesn't actually lead to a business sale either. It's another a difference than the real estate model, which is,
it's a risk in the deal. It's called a retrade.
Right.
And so if the broker or the seller pushes the buyer to up their bid, the buyer, there's a saying on the buyer's side, you tell me the price, I'll tell you the terms. That maybe is a different conversation, but they can, again, point being, they can put a big number on paper and then in diligence have to retrade that and say, that's not what the business is worth. Here's the real number. In the meantime, they've locked up the deal. So it's just between that one buyer and the seller. It's not open to the market. So the seller's already spent 2-3 months in diligence with them. You kind of handcuffed to get the deal done.
And this is where I feel like it's so important to have you two in the mix, because at the end of the day, if I'm, an HVAC running my business, or if I'm, just a business owner at the end of the day, they might not understand all the terms of these agreements and see the offer in front of them. They see that big number and perfect, I did this on my own, I'm out, where you guys can actually protect them from making a horrible mistake.
And on the retrade, knowing if that's legitimate or BS.
People spraying you with you.
So the broker, if you've done it for 8 years like we have, then because I got so offended when I first saw the retrades for the first couple of years.
Well, now we're on the buy side too, because beginning of that, we see it from both. We've been in both
now that
sides
we're investing on the buy side too, we understand it more. So having an M&A advisor that knows where the retrade's coming from and being able to explain to the business owner, okay, here's where that's coming from, or this is way out of line, let's push back on that. Know what to push back on and what not to is a huge part of why a broker is valuable.
And have you guys blown up a deal, let's say, that let's say you could have went through, you guys could have gotten your paycheck?
I do it constantly. I get very my method is I just get very personally involved with people. I don't know how to have colleagues and friends. They're all just friends to me and people I care about. And my power, I think, is that I care to the point that I will absolutely tank a deal, even if it's totally against my own self-interest, because it wasn't the right fit. So constantly I'll do it because it's important, because there is that point where you gotta break it, right? And you have to have that trust together to do that, because again, brokers, there are so many sleazy brokers. Part of the reason we are brokers is that we sold businesses and had bad brokers. It's really important to have someone that you trust, right? And you have to be able to have that to be like, hey, we got to call it, right? And be able to have someone trust that because there are these things that happen. Because it's really easy to get people to say, hey, well, I'm going to pay you all this money. It's really, really hard to get them to get that money in the bank, right? And so that whole process is like, it's months. And that's what we were there is like shepherding them, project managing / being therapists for the whole thing, right? Because it is, and it's also really hard because you can't, to be your own advocate is tough too. You're running your business and like, you don't know that your value or when it is appropriate or not, to Rob's point. And so being able to have somebody to be able to be that bad guy when they need to, like one of my favorite things is I love to get on with a bunch of lawyers and just tell them how much money per hour it's costing the clients. Like I like total up all the lawyers and be like, this has been a $4,000 15 minutes, guys. Do you think you can like get past that? Because there's all these bottlenecks. Everybody is paid differently. Incentives are all screwed up, right? Whereas as a broker, you're all incentivized to get the things closed, right? And to do it in a way that it makes the most money, right? Because it's all percentage based. So it is a really, really good relationship to do it that way. I can't think of any client I've had that at the end of it is like, oh man, we paid you a lot of money for that. Like everybody universally is like, this is like, how could we have done this?
Yeah, it's just good morals. Like at the end of the day, this is why I chose to come to Gerber Kawasaki is because we're fiduciaries here. We're independent here. So my job isn't to try to sell products to somebody. It's not trying to put you in some fund that pays me a commission. Like my job is to simply help you reach your goals, achieve your financial goals, and make the most of your money in a way that puts you first. And it's great to see like you guys might not be able to use the fiduciary title, but it's great to see you guys acting as
no, we're fiduciaries too.
Yeah.
Are you guys able
to? No, we have to.
We have a fiduciary duty.
Yeah, we have to. Yeah, for sure.
Now, are there business brokers that aren't fiduciary, or
there are those that definitely sketch the line? I mean, the used car salesman angle the used car salesman business broker type is definitely there, right? So you got to be careful on that front. But no, we are. I mean, just as a part of it, right? We absolutely are a fiduciary, and that's something we don't take lightly at all, right?
It's amazing.
And it is important. I mean, like for me, I've just my deals alone, I'm nearing like 500 million basically here in those deals. Most of those people are like, well, Loren, you've done this for me. Like, what do we do with this money? There's like, there really is a responsibility on that level too, to find good partners that can actually, that you can trust, that aren't just there, getting a VIG from some fund that they want to put in because it's, backed by some meme coin or whatever's I mean, the world's getting so crazy these days. Yeah. So how do you like make that right choice on both sides, but not only who your broker is, but what you do with this money when you get it, because
and do what you want with it, not just like, throw it into index funds or whatever, but okay, I want to allocate some to invest in small businesses. Like you can help guide them with that. So I think we have a lot of overlap on stuff like that because our business owners know how to start and run a business from scratch, which is awesome and commendable. And then jumping into investing, whole different pool for them, right? So
there are people that can start a business from nothing, that can just like come up with an idea and have that start just making money is a superpower. It is like, I think it is the most impressive thing that any person could do, I think, because it's just like such a skill set, especially as people that doing like 3 and 4 and 5 different businesses in different sectors.
With 6 businesses right
now. It's incredible. It's luck. A lot of times it's luck, right? I definitely meet people who it's like they just got lucky, right? Or the circumstances. But then when you do that repeatedly, like that is the rarest breed of person. And those people, right? Like they're also like, I find I have a anecdote I use, which is that there's sort of these like, they're like type 1 business people from 0 to 1, and they do an incredible job. But then there's a point where the business gets so big that you can't wrap your arms around it. So if you're the guy that like knows everybody and you are the magic, you're the guy that makes it happen. There's a point where you need to be able to find or sell at least a fraction of your business to somebody who can really help scale that thing up, what's beyond your reach, right? So
sorry to cut you off, but that's the hardest part, I feel like, is finding the right partner for a lot. Like I know a lot of business owner clients who are just like, everything's on their shoulder and they're dying to have someone like you two have such a great relationship. You guys build each other up and keep growing and growing. At our firm, like Ross and Danilo did that with each other, and they built each other up and built this amazing company. But there's business owners that are just trying to do it all on their own. And it is such a struggle to find that right partner and that right person to sell to.
And that's another thing to think about, right? Which is that you don't have to sell your business. Selling your business doesn't mean you're out of the business necessarily. It can be if you want it to be, and it should be if you're at that point, you're tired. All of those things are true. But there really is that point where it happens typically, we see around 2 to 3 million in EBITDA, right, in profit, and then about 10-ish million in revenue, depending on the business, where you're kind of at the limits of what you can do. You get stressed out. You just take on the burden of every single aspect of the business yourself. And that is a great time to sell not the whole business, but maybe just 60, 70%, usually a majority, because that's when you get like the most money. But then you find that partner who all they do is scale all day. They're like, I call them, they're like the type 2 ones. They're a little boring. You don't want to have a beer with them necessarily, but they just know how to, some of them you do. But like they just want to go from stone to stone to stone to stone, and they just know how to scale things. They don't take it personally, and they know how to delegate things in a way that you as type 1 guy never could do.
Yeah.
And so if you can take that ride with them, you get out, you go from working 60 hours a week to working 10, 15 or whatever you want. And then they scale this thing, and then you all exit together 5 or 10 years down the road. That to me is like, that's another amazing avenue as well. So when you're thinking about your business, it's not all in or all out. There really there's shades of gray across the board, because nothing's black and white in this world. So something to think about too, if you're at that point, because the size deals that I do, that's almost always where people are at. They're stressed. They're feeling like the business has gotten too big for them, and they just want to sell. And then when you actually talk to them, they realize like, well, you love this thing. This is your life. This is your baby, but you don't have the ability to like externalize and properly do what needs to do to hit that next milestone, next hurdle. And like, that's a beautiful time to look at this process as well. Because it's, again, you don't have to wait till you're 80 and at the end of the
40 and 50 a lot of times. So they have energy.
Everybody's 36 right now. I thought,
and they want to go after the bigger things, and they don't have time to.
Mm-hmm.
One of our guys wanted to do this big acquisition, $500 million acquisition from one of his suppliers. But like, he can't do that on his own, one, because has no idea how to do it.
Doesn't have the relationships.
And 2, doesn't have the time and whatever. Now that he's exited 60%, they're going after the $500 million supplier to buy.
Yeah, well, the joke is like it's like playing Chutes and Ladders. You have to take this ladder step up because you've gotten involved with these guys and have those big banking relationships, those big private equity relationships that you'd never have. So suddenly you have a seat at the big table to be able to fund the things you could only dream of before. And if you are confident and you can operate and you have a track record of what you've done, they will totally back you, because again, there's a lot of people in suits sitting around looking at your money and stuff, but the people that can actually execute on that stuff are so rare. And so you can put yourself in a really good position to be able to sort of take on the world. So there's other ways. There's different ways to sell your business. It doesn't always mean that you want out. It can be that it's your path to like
the next
expansion, the next step. For me, that's probably 30-40% of the business I sell. That's exactly that, right? Which is they come to me because they know that they want to get here, and they know that they can't do that themselves, or it would be way too hard, or it would ruin their family life, or whatever the thing
unlocks
is.
multiple things. Yeah, the mental part of it too. Unlocks the mental part of it, financial part
of it. It's hard, man. It's a grind. Especially if you're making a lot of money is great, but if you're stressed and you're not able to enjoy what you've got, or your life, or you're reinvesting all your money back in the business, so you're not actually, on paper it looks like you're so successful, but then you're still driving around your Prius. Like there's all these different ways to look at something and think about how you have the proper way to do stuff. I have friends that are more on the startup side, that they're worth so much money, like on paper, but then they don't have any income at all day to day. Yeah, it's monopoly money. It's not real. And so how do you balance that and like find, diversify yourself across, whether it's different assets, taking some money off the table, whether it's all these things are all like a part of kind of making a blended life where not all your eggs are in one basket. I think it's vital.
You guys provide a great opportunity. I mean, I have a client, he's okay with me talking about this, but let's say he's running his business, a detailing business, and he wants to focus on starting to build a detailing CRM to really help other detailers build it up. And he's, go try out all these different ones, and he knows what works. Like the guy is amazing at running his business, and he's very efficient, everything. Yeah. So he wants to try to build that up. But at the same time, he's running his business. So he doesn't have time to put the energy and effort in everything. And that's where something like that, sell a portion of your business, do the things you like, still be the face of it, and puts you at the table with PE.
And you have the PE who can fund that stuff and the expansion, and you still have a piece of it so you can sell the detailing business. Actually, I have a few businesses just like that. They have realized that they have a solution for the larger set of people in their industry, but they're kind of stuck in their lane dealing with their one thing. Actually, that's a very common thing. That's a great example.
It's amazing. And they can
detailing CRM, I like that.
It's a better business model too, having a software for a vertical versus
for sure. Yeah. I mean, it's
and a lot of people do that. I had a guy, one of our college classmates, he, as a class project, started a business that was a dog bowl that turns into a Frisbee. And that kicked off his entrepreneurship. They made that a real business with income. And then they pivoted they realized, I think the inventory management for that was a big issue. So they created a software to manage that inventory, sold that to Intuit.
Wow.
Yeah.
Kevin O'Leary would love that guy.
Yeah.
No, but it's like it's a really great concept thinking about how you could almost, what you guys offer is a way for business owners to diversify almost. You know, if a client comes to me and they tell me, Jimmy, I got $10 million of my net worth, pretty much my whole net worth is in Apple stock. I'm going to look at that guy and be like,
what are you doing?
What do you do? We got to diversify. We got to make moves here. We got to make adjustments. If a business owner comes to me and says, hey, I got all my equity in my business, it's worth $10 million.
Yeah.
You know, it's kind of like, oh, well, I'm not going to tell you to sell. You know, that's your baby right there. That's your life's work. That could be in your inheritance. So it's a much different conversation, but it's still a conversation that needs to be had because it's the same level of risk. Putting all your money in Apple, though, is very risky, and putting all your money in your business, though you have control, is still very risky. And you guys offer a way to almost diversify in a sense.
Yeah. There's kind of a couple paths to that, right? Yeah. There's the selling a portion of it, right? And finding that people to help you grow it, and then getting some chips off the table, which you can invest and diversify. You don't have to lose the thing that is your identity in order to do that. And then it also just is a part of a business process. So many people I talk to that, like I said this earlier, they just roll all of their profits right back into the business. And there's a point where there's actually diminishing returns on that investment. It's like sometimes it's really needed. Sometimes when you're in a growth mode, like it absolutely is the right move. But there are also times where people they just think everything has to go back, but they don't actually, the ROI isn't there anymore. And there's definitely a time where you got to figure out when to start taking that profit. And then also because it makes it better when you want to sell later, right?
To show that realize that not profit. A great signal for a buyer if you keep plowing every dollar.
Right, exactly. Because again, he talks about, it's profit, then the free cash flow, right? Which is how much is actually coming off the business. And that's a lot of the value right there too. So you got to really balance that, really think about that because a lot of people, I think that they think of it as their one asset. So they throw everything back in there without taking some money off the table because it's that taking that money out smartly, right? That is the thing that gives your asset the real value versus throwing it back in there. I mean, I think more to that, but
no, absolutely. I think two questions need to be asked, honestly, with a business owner. And one is, does my business benefit and does it need the free cash flow to keep going back in there? Does it need the money to keep being reinvested? Question two is, do I want financial independence outside of my business? And if the answer is yes, you need to work with an advisor to start planning ahead of time to set up retirement accounts, set up accounts outside, investment accounts outside of your business, build up that nest egg. So that way, in 20 years, when you want to sell, this isn't your nest egg. You have a nest egg here and your business is your cherry on top.
There's secondary effects to that too, just mentally. Again, if your entire life and all your eggs are in one basket with your business, the selling process is so much more emotional and honestly more chance of blowing up the deal without you meaning to because it's your entire existence.
Yeah.
But the guys who have 5 businesses or have other assets or other things going on, and this is one of them, it's a great business, they're great sellers, clients of mine, because it's like you said, it's a cherry on top. It's not the entire existence. And if you can,
we have more success, often we'll do better because we can walk away. Like it's much easier to say, hey, he doesn't need this. We don't need this. I mean, that's the power card is to say, look, I hear you, hear all your questions, hear your issues, but like, it's just not worth it for us. And we he's got 5 other businesses. He's happy. I mean, that is a powerful thing to be able to wield, especially as a broker and as a seller,
Yeah. It'll just help you as a business owner and as a seller. So us telling them to diversify, whether it's different baskets of wealth or just outside of their business, will just help everybody to sell a business.
I mean, this is where I guess going to like the W-2 employee or the W-2 worker, this is why I have them utilize these, the IRAs and the 401ks and brokerage accounts, because at the end of the day, if you could build these accounts up, create an income stream for you in the future, you're sure retirement, that word is really boring, but what you're creating is freedom. I'm stealing this from Ross Gerber himself. In America, money is power and power is freedom. And if you can create that level of freedom for yourself, you have the ability to walk away from a deal if you're a business owner. You have the ability to leave and stop working for a company that you don't bode with anymore at the end of the day. So I think everything we're hitting right now is super, super important.
Get yourself options, get yourself freedom. Yeah, but that's the point of money.
Yeah, it's the same. It's all about moderation. Everything is about moderation in life. I mean, I come back to this as I get older now and being a dad and stuff. It's like every single thing is about being moderation in everything. Don't put all your eggs in any basket. Just always be thinking about that. Like nothing too much of anything is a bad thing. I think that's true across all business, everything, just as you're thinking through this stuff.
Yeah. I mean, there's people that have all their money, like we said, in one stock or one company or this and that. It's like, Another great investment is the S&P 500. Like when you, a lot of entrepreneurs really don't like the markets. They tend to like real estate because it's real. They like their business because they see the cash flow, but they don't understand really, they don't like the markets. And the reason being is they may have invested in the early 2000s and got crushed in the
that timing's actually pretty spot on. I have a lot of owners who made a little money. This is timing out, right? Basically, they're all in their 50s now, right? Where they were making a bunch of money, got in the market, lost a bunch of money, got disillusioned with it, and now they're making their next big exit, and they're so scared of the market and what to do, and they don't have the right guidance.
Yeah.
And they just want to get into real estate, and real estate is really freaking expensive right now. So it's not actually necessarily the right call right now. And so that's I see that a lot actually. That times out right. Basically, like we're in the cycles we're in. Yeah.
Yeah. I mean, then we had the 08 crisis. The house market.
And that was that 08 crisis was what those people like felt, and now they kind of their scar. Yeah. And it's like, and fair enough, but also it's like things shift, and it's important to. Yeah.
And part of my job is to really help them understand and get the right mindset about investing. Because this isn't a, put in today and you pull it out tomorrow. That we're thinking of the long term. And we want to remember that when you're invested in the S&P 500, you're invested in the top 500 entrepreneurs in the US. Like that's what the S&P 500 is. Think about it. When, who was that? Enron. When Enron went under, who replaced them in the S&P 500? Do you guys know?
I don't know.
How would that time out? I don't know who.
About 2001, NVIDIA.
No way, really?
NVIDIA replaced them.
I've heard they're doing okay these days, NVIDIA.
I think they're doing pretty well. Right. So at the end of the day, the S&P 500 is there to vet out these companies and put the top 500 entrepreneurs right in front of you, and you have the ability to invest in it in a passive way. When you tell an entrepreneur that's like, whoa, why am I not utilizing that?
Mm-hmm.
And then you tell them, hey, there's accounts that you can actually put the investment in and it grows tax-free.
Yeah.
Well, that sounds pretty freaking great, doesn't it?
Yeah.
I should talk to a guy about that, actually. I got to get my ducks in a row here. You know a guy? You know a guy? Yeah, cool. I mean, actually, yeah.
I heard he's pretty good. Santa Monica, that one?
Yeah, nice. I love the location.
Amazing. So I guess kind of shifting gears back to the process of it. So you find the buyer, you find the seller. What next?
You want to take this?
We close it up, wipe our hands, say, good luck, guys.
Yeah, you wish.
That's the easy part. That's,
You get buyers like he's got 7 on his current deal, however many offers. You make sure you pick the right one with the highest confidence to closing, and then you start diligence. Diligence is probably worth talking about because that's, call it 3 to 5 months of the buyer vetting many things. Yeah. Hopefully 3 months.
What's the longest deal you guys ever had? Sorry to cut you off.
I've had one. I think I get all the records, sadly, because it's not a good record. Almost 3 years, 2.5 years.
2.5, yeah.
All over 2.5 years, just because a lot of reasons, a lot of just like things, regulatory stuff. But it's
Because remember, over the course of, call it 1 year, let's say your average deal is 6 to 12 months to get cash in the bank. So many things can happen in that 1 year, right? You got interest rates that spiked up 2 years ago. Regulation stuff happens. Your business numbers goes up and down.
Yeah,
buyer
a lot of
for whatever reason.
Business performance stuff typically is what.
Yeah, a lot
to make
happens.
it that long.
So, I mean, the records are 2.5 years.
What about the quickest one?
I mean, we sold e-commerce companies within a couple months.
Less than 2 months for sure.
That's how we started. We started as digital exits. I was selling small e-commerce companies for $500,000, and those are quick.
It's also easy when
they were quick before tariffs.
Yeah, and then when cash was free, and it was a different world even 4 years ago.
Yeah,
5 years
in the middle
ago.
of that, ZERP was a fun time.
Yeah,
insane amount of IPOs, all the fun
all that.
stuff.
Oh my god, yeah.
Even the debt was so much cheaper for acquisitions, right?
Yeah.
But diligence, back to the timeline stuff. I mean, 3 to 5 months, call it, of the buyer vetting. Your numbers are accurate. Operational diligence, legal, tax, making sure they want to buy this business and it's what we represented the business was, right? And the seller's not just putting in fake invoices in QuickBooks and all that kind of stuff. So they hire a third-party CPA, verify the numbers, talk with the seller over many Zooms about how they run the business with the people, and do you offer any profit sharing, and kind of digging deeper there. I have one closing in about a month. Go ahead.
I was saying one thing to note too is that there are exceptions with certain key men, but generally speaking, right, you don't want your employees to know about the sale till right at the very end, right? So that's something. When we talk about this, I think a lot of people they're like, well, I don't want someone coming in and like betting my business and having my employees find out. Generally, there are exceptions, right? Some people are very like key to the business, but for the most part, employees don't find out till either the day before or the day after the business sold. So just something to throw in there because I think businesses are usually concerned about confidentiality, right. Employees finding out, competitors. And someone listening is thinking that exact thing right now. So
Yeah.
let's hit it because it is a big deal.
After 12 years, like we would be out of business by now if that happens, right?
Yeah, for sure.
But yeah, usually there's closing. There's day one where the new owner steps in with the seller shoulder to shoulder and say, hey, we got transition of ownership. Don't worry, your job is still safe, all that kind of stuff. But back to diligence, after they do that stuff, we get lawyers involved towards the end to do purchase agreement things. Lots of documentation around the seller transition papers. If there's equity roll of 20% on the seller side, what that buy-sell agreement looks like. The purchase agreement's the main legal agreement that outlines all of the terms on the acquisition. That goes back and forth with lawyers with red lines a couple of times. And once that's all resolved, we move to closing with, usually the buyer's attorney wiring funds to everybody. And it's a DocuSign. It's really anticlimactic. Right?
Yeah, the end. People they expect some huge thing. And it's like,
sometimes you sit around a table like this and, you got the papers, you do the signature and you take a photo. But a lot of times it's just a giant DocuSign package and you sign it and then we text the seller and wait for the wire to come in. Like, you have the wire yet? No, not yet. Takes a couple days. Like, got the wire. Congrats.
And then typically you're running the business as usual for some period of time after, right? So it's like you're also just go to work the next day and you're like, well,
it's not a whole lot. Everything changed, but not a lot changed.
Yeah.
Now, with that whole process, you mentioned lawyers, CPAs, all this diligence. Like, what do the fees cost and who do they go to? Is it going on the seller or is it going on the buyer?
So,
Split.
Good question.
Yeah, good question.
We can divvy it up in a couple of ways. So, diligence, the buyer pays for when they're verifying everything. So, hiring a CPA firm to look at the numbers through QuickBooks, the buyer pays for that diligence process, as we've done a couple of times on the buy side.
That's what it locks them into. That's the thing, is you sign this LOI, and it used to be people put down these non-refundable deposits and all these things. And while that happens, it's rare because the buyer is coming in and they're just trusting that what we said is true, and they're the ones that have to spend that money to verify everying. And the costs of that have gone up a lot.
What does it run normally?
I mean, it's anywhere from $40,000 to $100,000 depending on the size of the deal, basically, or more. I've had a deal that's been $1 million on bigger deals, but even on smaller deals, it'll be $100,000 to buy a $3-4 million business.
Wow.
Yeah.
And that's all typically on that.
It's on the buy side, yes. Yeah. So they do the heavy cost comes from the buyer is the one that, and then the sell side. You have to have your own account, and you want to as well. It's not like
it's the best money both sides are going to spend, by the way, in the process.
Because you want to have, obviously your accountant's going to cost something just getting all the stuff together. There's a lot of requests, and then your lawyer, right? You want a lawyer that really knows what they're doing and that can advocate for you and all that. But it's obviously much less money than the buyer spending because you're reacting not to something versus initiating.
Yeah. So attorneys, both sides pay for their own. On the seller's side right now, one of my deals, he's paying about $40,000 for the seller to close the deal. That's probably going to be his final bill.
That's about
the sell side advisor like us. We take a percentage at closing because we don't take anything during the process.
Yeah, that's important. We take money. We take money at the end, like a real estate agent kind of thing. We don't, which I think is a big thing. So the incentives are aligned to get the thing sold, right? Because then we make money when you make money, which I think is a really healthy way to run a business.
Hey, we run our business.
Something about that, right?
Yeah, that sounds about right there. It's a great way of running a business. Our goals are aligned at the end of the day.
Exactly, right? Yeah, I think that's exactly the right way to run a business.
What would you say are some things that a business owner should be aware of, before selling their business? Like if you were just to give some, baseline, couple rule of thumbs for them, or even one that's considering selling their business.
I have a couple general high level advice when people call me when they're looking for 2 years down the road.
Yeah.
They're like, what are the top things I should keep in mind? And I say, usual 3 things are delegate away from you, like we've talked about, clean bookkeeping.
Yeah. Yeah. Maybe if you haven't been paying your taxes, maybe for a few years, think about, especially if you're earning less than maybe $2 million in profit a year, definitely maybe think about paying a little more taxes than you might otherwise.
Just pay $300 for a monthly bookkeeper.
Yeah.
Maybe you're doing stuff on taxes, but when you prep for a sale, you might want to start paying taxes because then the buyer can get more debt for it. We can talk more about that.
Yeah.
And the third thing just keep growing the business, because if the business is slumping over at any point during, before selling or during the sale process, the buyer's just going to start.
Yeah, people, they think the deal's done and they check out and then things start to tank and then they renegotiate. That happens a lot.
Keep your foot on the gas, clean bookkeeping, grow with your team, then you'll be in a good spot.
Amazing. Yeah. Yeah, I think honestly, a lot of business owners, obviously they like the write-offs, they like to show as little as possible. But before selling, you want to start showing more. And there's, if you structure things right beforehand, it's not a terrible thing to pay taxes. There's ways to strategically not pay taxes while still showing the 100%.
Exactly. Right. And there are ways to, and talk to us. I mean, I have dozens and dozens and dozens of people that I'm not yet representing officially that I'm giving advice to throughout the process. Because there are ways to pay less in taxes while having it be things that you can add back, for instance, to a bank, or, like you said, talk to people that can help with the taxes you do pay. There are ways to do that right? It doesn't, and there are always ways to do that, and that then helps you later on in the sale. And you're always like, better to pay that tax now because you're going to get 3, 4, 5, 6 times, whatever that profit difference is later. Yeah. So it's a totally
and banks are very strict and getting more strict on what they do count on the taxes. So it's important you put in the right buckets, like you were saying.
Yeah, exactly. And I mean, like, there's before the sale, before all this, there's things you can be doing. I know a lot of business owners making $500,000, $1 million a year, and they're still filing as an LLC. This isn't this is not financial advice. Obviously, have a conversation. Every case is unique, but maybe setting up as an S corp could be really strategic. The way this works is when you're an LLC, your income's flowing through you. You're paying the income taxes on it. You're paying Social Security, Medicare, all the above. When you're an S corp, your business makes the money, and then they pay you a salary. Well, now you're only paying the Social Security, the Medicare, the self-employment taxes at roughly 15% on your salary. So let's say you made $500,000, $200K salary, $300K gets to avoid about 15% in taxes.
If you elect that, right? Be careful. Yeah,
correct.
It's the election is the key on that one. Yeah, for sure.
And what you're bringing up there, there's so much to this. It's not that simple, and this is why you need a team of advisors. This is why you need CPAs, financial advisors, everything.
Yeah, to your point, S corps provide a different set of problems at closing that CPAs and tax people can. We work through a lot of F reorgs and 338 H10 elections, all this kind of complicated stuff to us that requires the CPAs to get involved at the closing table. That's a whole different basket.
No, that's another podcast topic for sure. We could just dive into that stuff.
Yeah, no, exactly. And this is where I double down why you need a team. You need the everything from even an estate planning attorney, because there's different trusts that can be really beneficial to you to use. You need the CPAs, you need the business brokers, you need the financial advisors, you need it all. And you build this team because at the end of the day, you're running a multi-million-dollar business. Right. For athletes, I tell them all the time, like, you are the CEO of Me Incorporated. Like, you are the business, and you need to build a team around you. And same for business owners. They are the business, and they need a team around them.
Yeah. And a bad team can kill a deal immediately.
That's the other thing, because for instance, like lawyers, I love any lawyers listening. There are many great ones. My best friends are lawyers, but
brokers included too.
But brokers, oh my God, brokers, just so many bad brokers. But the thing is like for lawyers, they get paid. The more turmoil there is, the more money they make, right? Especially if they're paid hourly, right? Sure. So the more drama that they can incite by saying that things are unfair or not right, the more they're going to make. Because like a lot of lawyers, they want to get the deal to the brink of disaster, and then right at the end they just concede to everything and they just say it's all fine. And that is, I see that all of the time. Wow. And it's sometimes even well-intentioned lawyers. I don't know how. I think some of them do it almost it's just like second nature because they
or they enjoy the sport of it.
Or they enjoy the sport. Yeah, it's the hunt or whatever, the game. And that to me, I hate that, because it's like, what are your goals here? Your goals, you want this business. Everyone wants this business to sell. If you are being responsible for your client as an attorney, you should be going with that as your North Star and while protecting them, right? Yeah. And so many lawyers, I think, it's the hunt. They want to just get the kill and the win. And it's like, who's winning here? No one. All you're doing is costing everyone money and making it a lot more like bad will towards the deal.
A lot of times you got to get the client to keep their team in line. When you have to get the client to lasso people and keep them in line, that's a bad situation. So team is important up front.
Very, very important.
Absolutely. A lot of these business owners have insurance advisors. They have tax advisors. They have estate planner. They have the attorneys. They have everything, but there's nobody really quarterbacking the show. And that's exactly what we do as financial advisors. And here at Gerber Kawasaki, we're comprehensive planners. So we're going to touch on all aspects of your life to make sure that you really are in a good place and that your team is working hand in hand to get you to the Super Bowl in sports terms there.
Right. Yeah. For sure.
Well, guys, this has been an awesome conversation. Yeah. I would love for you guys to share some information, how people can reach out to you, how they can get connected, have a conversation. And if you want to leave us with a little last piece of wisdom, I'd love to hear it.
Sure. I mean, businessexits.com is the website to kind of learn more. It's pretty basic. You're much more active on the socials and all the things, but
I'm on the Twitter. Our first name's at Business Exits, Loren at Business Exits, Robert at Business Exits. You can always reach out to us.
Loren, Loren. That's the boy way.
Final words of wisdom: prep early, clean books, good team in place. What else would you say?
The big one for me is it's never too late to have a conversation. you don't have to sell your business until the day the money gets sent to you, right? And so having an understanding, having a relationship with people that can help you with this. You can text and be like, hey, is this a good move for me? Is this not? To start to think early, and don't wait till you're 80 years old. Like think about, because you want to sell right at that crest. Don't wait till you're at the top of that. You want to sell right here on that growth curve, right around there. And that is something that I think a lot of people don't think about, and that like it's not weak to start to ask for that help in those advisors. I think that's like the number one thing I'd say to people.
Half our job is being a therapist. It's
never too early to have a conversation, right? Even if you're 8 months in, I have a lot of people call me and they hit something and it's like, it's not the right time, but I'm there to help them, guide them there. And I think that's my number one piece of advice is like, start to look for support in that area early. Because there's always the right moment to strike.
Yeah. I love it. Well, guys, thank you for coming on the podcast. It's been great chatting with you both, and I'm excited to see where things head.
Yeah, thanks, man.
Thanks, man.
It's been great.
It's fun.
Yeah.